Good afternoon, everyone. We're here to explore the basics of VAT and the filing essentials associated with the temporary VAT reduction in the rates. I'm Eliza Mills, and it's my pleasure to welcome you to this webinar this afternoon on behalf of the Inland Revenue Department, in particular the Comptroller, the Deputy Comptroller, and all staff. It is really a privilege to be able to serve you in this capacity this afternoon. Now, you may have wondered, how does the recent VAT reduction affect our businesses or the prices you pay at the till? Or you may be panicking while you're filing your VAT return, or maybe unsure of what you're doing and if it is right. Well, I have a feeling that you're not alone. So today, we're here with two distinguished individuals, professionals in their own right. On my left, there is Miss Chelene Matthew Keynes. She's the manager of the Large and Medium Audit and Investigations Division here at the Inland Revenue Department. And on my right, there is Miss Tonya Lawrence, manager of the Small and Micro Audit and Investigations team. I'll invite them both to say something briefly to you.
Good afternoon to everyone. Thank you for joining us on this brief webinar.
Good afternoon, everyone. I'll join my colleague and say welcome to our one of the first of our webinars. We hope that at the end of it, you'll be duly informed and you'll ask all the questions and have them answered as you so fit.
So from the get-go, you see that they're able and they're capable. And together, they'll break it all down for us. We will endeavor to help you understand what VAT is. We'll discuss what the time of supply, the concepts and rules, and we'll present steps that need to be taken if taxpayers need to become compliant and also remain compliant in light of the recent temporary reduction in the value-added tax rate. So if you're a business owner, if you're an accountant or somebody who just wants to be in the know, this afternoon is ramped with a lot of insights that will save you time, money, and no doubt spare you some headaches as well. Just a little housekeeping matters before we move forward. Please mute your microphones. You're welcome, of course, to turn on your cameras if you so wish. There will be a comment and or question and answer section at the end of the presentations. And feel free to share the link that is in the chat now or should be in the chat now to individuals you think would benefit from this presentation this afternoon. Monitoring the chat this afternoon, we have Mr. Ordain Blanchett. He'll also be queuing up our presentations for us, as well as Miss Renice Francis. She's monitoring the chat and she will contact you if need be. We're also encouraging you to document who you're representing, your name, leave your contact information with us so that we can send you the presentation after the session. We're going to start with Ms. Keynes. Ms. Keynes, I'll invite you now to present that overview and why it matters.
Okay, good afternoon to everyone again. My simple task today is to give a basic overview of the main characteristics of the value-added tax VAT. I won't assume that everyone who has joined us today is a VAT expert. Instead, we can treat this as an introduction to VAT for those who may be new to it, as a refresher for those who may use it on a daily basis but may have forgotten certain concepts, or as a reminder for those who may not use it on a daily basis and would also want to get a refresher of the material. What is VAT? VAT is a consumption tax that is levied on the goods and services at each stage of production and distribution. It is an indirect tax that is added to the product's value at each stage and ultimately paid by the final consumer. Businesses collect the VAT on behalf of the government at the point of sale. The VAT that is paid to the government would be the difference between the input tax claimed and the output tax collected at the point of sale. Why VAT? VAT is not predominant to cities and cities only. Many countries across the world have implemented the value-added tax at varying stages. Some countries implement VAT because, one, it's a revenue generator. It's an efficient and reliable source of government revenue. It's supplied at each stage of production, from production to distribution, and it creates a continuous stream of income for the government. Simplicity and transparency. It is a relatively simple to collect, tax to collect, and to manage. It allows businesses to collect on behalf of the government and report it on a monthly basis. Since the VAT is paid at different stages, it is a transparent system which is less prone to fraud compared to other tax types. It encourages investment. It is typically applied on a consumption basis, meaning businesses can recover the tax they have paid on inputs. This will allow the businesses to have more monies to invest in production and other business ventures. It encourages exports, as exports are usually deemed zero-rated, and hence it makes exports more competitive in international markets and help to boost the country's export economy. It provides a broader tax base because, unlike corporate income tax, which targets companies directly, value-added tax applies to everyone. It broadens the tax base, making it easier to collect from a larger pool of customers. It provides fiscal policy flexibility. Because the government can adjust the VAT rates, whether by increasing or decreasing the rate, as a tool to control inflation or to manage economic growth. VAT rates are also easier to adjust other than other forms of taxation, giving governments more flexibility in shaping fiscal policies. Overall, VAT is a popular tax system worldwide because it's efficient, it is relatively easy to administer, and because of its ability to generate consistent revenue. Types of supplies. There are three main types of supplies for value-added tax. There's exempt supplies, standard rated supplies, and zero-rated supplies. Each category will determine how a particular product should be treated and will affect the business or consumer in a different way. Standard rated supplies are goods and services that are subject to the regular rate of VAT. Before January 1st, 2025, the standard rate of VAT was 17%. But as recently announced, from January 1st, 2025 to June 30th, 2025, the standard rate is 13%. Zero-rated supplies are goods or services that are subject to VAT, but the VAT rate is 0%. This essentially means that since the rate is 0%, no VAT is charged to the consumer. Businesses making zero-rated supplies can still reclaim VAT on any inputs that they purchase to produce those supplies. Exempt supplies are goods or services that are not subject to any VAT. No VAT is charged on the sale of the item or service, and businesses making exempt supplies cannot reclaim VAT on any inputs. That is, inputs related to purchases or expenses. Types of supplies summary.
market. That is very, very.
Type of supply summary. This table helps to give a summary of each type of supply and illustrates the different aspects that were just discussed. For standard rated supplies, VAT is charged at the standard rate. Zero rated supplies, there is 0% VAT. Exempt supplies, there is no VAT. The import tax that is allowable to be claimed, yes, the taxpayers can claim with the import tax for standard rated supplies. Zero rated supplies, yes, and for exempt supplies, there is no claim for import tax. It also shows examples of each type of supply. Classifying goods and services into these categories is important for both the consumers and businesses, as it determines how much tax is to be paid, whether the VAT can be reclaimed, and how VAT is to be reported.
May I ask whether or not those of you who are in the webinar can see our screen, please?
Yes.
Thank you very much.
There is one last aspect or category of supply, which is the reduced rate of VAT of 10% which is charged on restaurants, hotels, and/or for commercial rent, which is the rate of 10%. That concludes the overview of value-added tax.
Thank you so much, Mrs. McCain. You did a wonderful job. And of course, so for those persons who would have joined just recently, I didn't get the full presentation. Ms. Matthew Keynes would have covered what is VAT, why it is important. And before we go to the next segment, I'd just like to give us a little reminder about property tax. Remember, our contributions make a valuable contribution to nation building. Okay, and so we are having a bit of technical difficulty as it relates to that particular promotional item. So I'd like to invite our next presenter, who is Mrs. Tonya Lawrence. She will explore what the time of supply is initially, and then she'll branch off into compliance issues.
Good afternoon, everyone. Again, welcome to our webinar on VAT tax. My task this afternoon is to go through the VAT reduction rates, but first point out the time of supply rule that would assist with the application of the reduced VAT rate. So what is time of supply? Section 36 of the Value Added Tax Act speaks to time of supply. Now, when it comes to time of supply, it refers to the point in time when a supply of goods or services is considered to have occurred for the purposes of tax purposes. Now, Section 36 has a time of supply rule. Now, that time of supply rule states that the supply of goods or services occurs on the earliest of the date on which A, all the goods are delivered or made available, or the performance of services is completed. B, an invoice for the supply is issued by the supplier. Or C, any consideration for the supply is received. So in relation to the VAT rate being reduced, when persons are conducting whether a good or service, it's very important for them to understand this time of supply rule. And again, I'll state, you can find it in section 36 of the value added tax. So when you're trying to apply the rate, understand that the rule states that it's the earliest of, and I repeat, the goods or services made or available, or sorry, the goods that are delivered or made available or the performance of the services is completed. An invoice for the supply of the good is issued by the supplier, or any consideration for the supply is received. Now, in relation to persons who offer credit agreements and layaways, section 36 speaks to it as well. Section 36(2) states that a supply of goods under a credit agreement occurs on the date of the commencement of the agreement. And then concerning the layaway section, that's section 36(3), it states that a supply of goods pursuant to a layaway agreement occurs when the goods are delivered to the purchaser. So it's very important to understand the differences when it comes to a credit agreement and a layaway agreement. So the reduction in VAT rate. The standard rate has been reduced from 17% to 13%. So any good or supply that was treated as 17%, it has now been reduced for the period January 1st to June 30th, 2025. It's now been reduced to 13%. So of all goods and services that were at a rate of 17% have now been reduced to 13%. Now, what are the requirements for businesses? Businesses are required, or any VAT registrant, they're required to, 1, update their point of sale system. So the new rate of 13% must be updated through your POS system. Communicate the charges to the customers. So clear signage and receipts and invoices should reflect the correct VAT amount for that period. So we're expecting persons to, the prices on your shelves or the prices that are being displayed, it should be displayed at a rate of 13%. And also your receipting should stay the same. So you should not have a receipt that states that it's 13%. However, the calculation is 13, right? It shouldn't be either or. You have to change your system. You have to change your receipting and your system to state that 13% is being charged. It should be displayed and the calculation should reflect the same. Additionally, file your VAT returns accurately. Businesses must ensure that they correctly report the sales at the 13% rate. Now we're going to look at the online filing screen. And for those of you who file online, and I hope it's everyone by now, but what I want to ensure that persons do not get mixed up with the building materials 13% line. So when you're filing your VAT rate, we have already your VAT filing, sorry, for the months that are coming up, and you should have already had a filing for February 15th. But what should have happened in that case for persons who filed in February is that we had already adjusted our online form to capture the rate of 13%. So I have before you a filing that was done back in 2024. So anyone who filed for any period in 2024, as you can see, the standard rates apply at that time. VAT inclusive was 57.50. And of course, once filing online, it would work out that calculation for you of the VAT fraction, which is 17 over 117. Now, if we are filing for any supplies that were done in the month of January, then if we use the same example with the 57.50, we'll note that the rate would be done at 13%. So even though on online it doesn't show you whether the rate is 17 or 13, the calculation has been changed on our end. So it's very important for persons to ensure that their filings are correct, that they've collected the correct amount of VAT, and that they have filed and applied that amount correctly. And that is the end of my presentation. That's that. to have a wonderful afternoon.
Thank you so much, Mrs. Lawrence. I'm inviting those of you to share the link. We are still at a critical juncture where we will entertain your questions. But before we do so, we have the video on stream now. I'll actually to just revisit and present some vital information as it relates to the calculation of VAT.
Okay, well, these slides are coming up. I'd like to just highlight two examples of what one should expect to see with the reduction in the rates. There's one example that shows the cost of a particular item is being lowered for a consumer. So for example, if a product costs $1,000, the VAT at 17% would have been $170 for a total cost of $1,170. After the reduced rate to 13%, after the reduced rate of 13%, the VAT will be $130 for a total cost of $1,130, which shows a $40 reduction in the cost of that particular item for the consumer. For the next example, if a family spends $2,000 per month on taxable supplies, including bills, at a rate of 17%, the total cost would be $2,340. With the reduced rate of 13%, total cost would be $2,260 for a savings of $80 per month or $480 over the 6 months period. This increases their disposable income and provides extra funds for them to spend on other needs or for savings.
That's it?
Yes.
Thank you very much. We will present a brief 60-second clip of the commonly asked questions that one may have with respect to time of supply. We acknowledge that you may not hear the audio, but nonetheless, if there's a problem, we will run the video and the information will be there.
Ross, please no. She said she went for a titty. Oh, yeah?
Please remember to mute your microphone.
A significant amount of focus on if there is anything, if there is any department of government, something to
There you have it. The frequently asked questions they are all published on our social media pages, and you may also access this information via our website. All right, it's now your time to participate in the webinar. We're going to open the mics. This segment is specifically dedicated to your questions. So feel free to raise your hand and we'll acknowledge you. All right, we have a hand. Please excuse me if I cannot raise. Is that correct? Feel free to open your mic.
Hi, good afternoon. Riaz. Close enough. Some of your persons there would be familiar with the name. Just some short questions though, and it's really for the knowledge of everyone. Firstly, where can we obtain a list of the zero-rated items? It's a challenge that we always have, especially with customs. And then after COVID, it had some changes to it. And we can't get a list of zero-rated items. So that's one. And the other thing I wanted to raise is with respect to the credit note. Okay, so you do a sale in December, and then you have to issue a credit note in January. We have had customers complain that they're not being refunded the full amount because, of course, as you know, when we do the credit note in January, it will be done at a reduced rate. So that is one of the challenges that we had. How do you issue a credit note then in the month of January for a service issued or goods sold in December? And the last thing, a customer places an order in December. Kind of related, a customer places an order in December. The supplier purchases the goods, they pay VAT at their 17%. They deliver the goods now, or they provide the service in January, February, whatever they need to do to get it to standard. And they want to charge you at 17%, saying that this is what they paid. So these, especially the last two issues, are things that we experience, where we work. And we'd like to get some guidance on how to treat with these issues. Thank you.
Thank you very much for your question, Riaz. I'll allow the ladies to respond. Firstly, we'll start with Mrs. Lawrence.
Okay, hi Riaz. Good afternoon and everyone else listening. When it relates to the zero-rated items, and it can be found in Schedule 2 of the Value Added Tax Act. Additionally, the Customs and Excise Department and the tariff codes, they should have a list of the tariff codes that relates to the zero-rated items. Now, anything that changed after would be the exempt list, the stuff that became exempt. And there were items that were placed into a basket. I think that was done in 2014. And then again, of April of 2015. So, and that would be in relation to exempt supplies. And that's found in Schedule 3 of the Value Added Tax Act. Also, like I mentioned before, the Customs and Excise Department will have a list of the tariff codes and the things that have changed in relation to the exempt supplies. But I do note your question. I hope I've answered one with that question. And two, what we can do is probably ensure that we can get that information somewhere on our website to assist our taxpayers who have a question, because it's a valid concern. So that's something we can definitely try to ensure that we have on our website. We have a great publicity team here. So that's something that we can work on, so it's easier for our taxpayers to have access to it. Hope I've answered that question.
And the other one is with respect to the credit note that is issued in January for services in December. Is that your concern, Mr. Reyes?
Yes, it is. And to answer Tonya, yes, that answered the first part. So we look forward to having that list updated or accessible. Yes, so that is the question for the second part.
Well, in relation to the credit note, and I'll allow Mrs. Matrikins to dip in as well, but it really showed, because the transaction occurred, and remember we are looking at the time of supply rule, but the transaction occurred in December. If the VAT calculated and paid on at that time was at the rate of 17%. If there's a credit note done, really should be refunded for the amount of VAT that the person paid at 17%. I understand that you're saying that now that your system has changed to 13. That is, I'm not sure how I could say this to you, but it should be refunded at 17. I'm not sure how your system would accommodate it, because I'm not familiar with your system. So, but it should be done at a rate of 17%. I'm not sure if you have to do a journal entry. I'm not sure what your tax would be, but it would have to be at that rate of 17%, because that's what the person paid. I don't know if Ms. Matrikins has anything to add, but
Yes, that would be correct, Tanya. What the taxpayer can do, if the system has already been adjusted for the 13, then as you would have mentioned, they could do a journal entry to credit the taxpayer for the full amount of the 17%.
The challenge there is, how do you report that on your VAT return? Because you're going to get some figures that don't balance. Because remember, your VAT return for January would have already been adjusted to 13%. So when I reflect my sales, I'm going to have a difference.
well, in the case of that, the VAT adjustment line would accommodate for that difference in the sales.
Okay, fair enough.
That is good, Mr.
Was there a third question?
That's for the credit note. And the other one, where someone purchases or they place an order in December, the supplier claims that they would have paid the 17% VAT. When they deliver the goods, they want to charge at 17% rather than at the 13%. Is that allowable?
Okay, well, if I'm understanding your question, I'll have to take you back to the time of supply rule. And that's section 36 as mentioned before. Now, it's the earliest of the good or service being delivered, the invoice being issued, or consideration for the supply or the good being considered. So if the person if no invoice was issued in the month of December, but the good was delivered in January, then whichever is earliest, that's the applicable VAT, and the applicable VAT rate would be applied. So if the good was delivered in January, then the rate would be 13. If an invoice was issued in December, then the VAT rate would be 17. Am I clear? Yes.
Yes. That's exactly what it is. But that answers the question.
Okay, thank you. If you want to add something else, Mr. Keynes? There's another person, Mr. Kizaran Grant.
Hi, good day. It's Kizaran, I'm a female.
Please have me explain. Sorry about that.
It's okay.
Free to ask the questions now. And then afterward, we'll
Oh.
go ahead.
How do I go about requesting or getting a refund per se for being charged VAT at 17% in the month of January?
So the question, as I heard, Ms. Grant, is how does she go about getting a refund for VAT that was charged in January? Is that the question, Ms. Grant?
Yeah, at 17% instead of the 13% that was given. Some companies have difficulties changing their VAT rate.
So just to confirm, you're talking from the end, from the consumer's end. Are you saying you would have paid VAT at 17% in January, but you're not able to reclaim the amount you paid from the vendor, the supplier?
Correct.
That's what she's saying.
Did Shirley get
Can I give
capture?
an example for clarity?
Sorry.
Hello?
Could you kindly repeat?
Let me give an example for clarity. For example, the banks had difficulties changing their rate from 17% to 13%. So for example, some bank charges would have been charged on my account at the rate of 17%. And the rate should be 13%.
On a fee? Is it on a fee charge?
On a fee charged by the bank?
Yes.
Well, the bank can make the adjustment on their end. So if they would have charged you the 17% in January, they can make the adjustment on their end in terms of either reversing the transaction and reposting it with the new amount, or they can I guess that would be the best suggestion in terms of just redoing the posting to recharge your account for the correct amount of the fee, inclusive of the 13% VAT.
In turn, allowing you basically like a refund of the overpayment of that.
Okay, thank you.
Understand?
Yes.
Okay.
Are there any other questions? Any other questions from anyone else? If not, I would just like to thank you for attending the webinar this afternoon. We appreciate your presence and we recognize that it is our intent rather to use this medium in following periods to present useful information. In the chat, you should see a link to a questionnaire that will be encouraging you to fill it out on our behalf. It will give us an idea of how well we did with this webinar. You're free to make suggestions on that as well. Someone is raising their hand. I'm sorry, I did not see that. Ms. Grant, have you finished? Is there someone else who's raising their hand? I thought that I saw a comment to that effect. If not, I'll invite you to complete the questionnaire. If in fact you have put your contact email, and in the chat, we will send all of the information to you, all of the presentations, as well as the video presentations to you, so that you could have them for future reference. All right, so thank you once again for attending. It is our privilege to serve you. Please, if you have further information, notwithstanding we would have presented and we're going to send information, feel free as well to visit our website, which is www.skn.com. Thank you. There is a question that is coming in from someone else. Go ahead, Mr. Jason Christopher.
Yes. Hi, good afternoon, everybody. I just wanted to reinforce what my colleagues at the IRD mentioned regarding the question that raised in terms of the, I think he spoke about the credit note issued to somebody in January for a refund or something like that. I don't think it was, I don't think that it would have been, well, clearly explained, but because he was saying that they paid 17% and in January you want to refund them, but they waited at 13%. That was it, right, Tanya?
That was the issue.
Yeah. So normally, Tanya, you mentioned that it would be reported on it should be reported on the VAT adjustment line. And regardless of the rate, at this point, you're just reporting the VAT amount that is refunded, not any rate. So if the VAT amount was $100, that's what you're reporting. So it doesn't matter what the rate is at that point. So just to clarify, I just wanted to stress that point, and for persons to be clear on it.
We appreciate the submission, Jason. Thank you very much. Is that hopefully that was useful information. Mr. Rias is pleased as
Yes.
well.
Yeah, yes, it is. That's fine. I understood. That's fine.
Wonderful, wonderful. Are there any other concerns before we wrap up? And we will, once again, before you leave, play the time of supply video that was put together with our frequently asked questions and responses with some examples. There you go. Feel free to fill out our questionnaire that will tell us how we did on this webinar. Make future suggestions in relation to what you'd like to see us do, because it is our intent to continue meeting with you in this forum. There's always room for
Excuse me. Excuse me, I have a quick question.
Go ahead.
Thank you. It's a slightly different issue to what's been dealt with during the course of this training session, but I'm wondering if any thought has been given by the department to revising the application form, the VAT return form, to allow you to be able to save the form. Because what we find is that sometimes we might be completing the form and certain information is not available, we go away, and then when we come back to it, we have to start all over again. I think in the previous system, you were able to save what you had done and you could return to it, but that's not possible, or doesn't appear to be possible under the new system.
That's a valid suggestion. We are not able to tell you if we're able to do that at this point in time, but definitely we'll take it on board and submit it to the team responsible for the enhancements. Are there any suggestions with respect to the VAT or even SMART? If not, we'll wrap up and invite you to do so, to fill out our questionnaire before you leave. We'll also send it to you, but we'll also play for the one last time, as individuals were saying that the video is going a little fast. We're going to play that again. All right. Thank you so much for taking the time out of your busy schedules to come and meet with us in this forum. Someone has asked if there are any follow-up questions. Please feel free to direct those questions to the email address inlandrevenue@ird.gov.kn. For follow-up questions, feel free to visit Inland Revenue. It's been typed now, Inland Revenue at ird.gov.kn. I'd also like to take this opportunity to thank our courageous guests, which is Tonya and Shalene, for presenting this afternoon. I'm looking forward to having them engage with us in this forum at another time as well. So it's Inland Revenue at ird.gov.k. Notwithstanding this, you may feel free to come to our department, inquire of Shalene or Tonya and their teams so that you can get clarity on any issue that you have. Please feel free as well to follow our social media pages. That's in St. Kitts and in Nevis, Inland Revenue Department. That's for Facebook. We are also on Instagram. All right. Thank you so much, and do have an exceptionally wonderful afternoon.